South China Morning Post, 6 October 2022. Tensions between the US and China allow these 7 trading partners to profit from Washington's friendshoring. The democratic world used globalization as a bribe to cooperate against communist forces. Now, China is the most significant communist menace. A new analysis reveals which of the allies would be the best candidates for friendshoring as the United States intensifies attempts to move supply chains away from strategic enemies while strengthening connections with allies. According to research issued on Thursday by Allianz Trade, Mexico, South Korea, Japan, Vietnam, Indonesia, Brazil, and Malaysia are best positioned to benefit from Washington's effort to shake off the dependence on China. The analysis, which put a strong emphasis on globalization and friendship, looked at potential candidates for the US-initiated strategy of reshaping the global supply chain through allies based on their trade complementarity and lack of tensions with the US and EU, as well as their competitiveness with China in terms of the global value chain and traditional trade. According to Allianz, competitors in Asia like Vietnam, Taiwan, South Korea, India, Thailand, and Malaysia somewhat profited from the period's elevated US-China tensions. According to the report, China is also a vital supplier for the most globalized industries, including computers and telecommunications, electronics, household goods, metals, automobile and transportation equipment, chemicals, and machinery. China accounts for between 6% and 27% of global output in these industries. China has been steadily increasing its global influence to overtake the United States as a superpower. According to Ludovic Subran, chief economist of Allianz, there isn't a quick and simple solution to friends here away from China. Reshoring, the lion's share of China in international trade, will take forever. According to data in the latest research, China is the world's largest supplier of goods and services, contributing about $3.4 trillion annually to global value chains. Value chain imports from China make up 0.5% of the world's output, while the shares for Vietnam, Singapore, Taiwan, and Hong Kong are even higher at 3.9%, 3%, and 2.3%, respectively. It is currently 0.6% for Germany and 0.3% for the US. While the globe is more connected than ever in trade and goods, Subran continued, there will be more friction in a fragmented world. Additionally, there will be 2 functioning levels: political rhetoric and pragmatism. The research also stated that the globalized industries mentioned above comprise most of the US and EU's required dependency on China. Subran also cautioned against the risks of excluding nations from the global value chain because doing so would drive up manufacturing costs. Companies would adapt to the scenario to bear the costs because they are accustomed to US-China tensions, according to Subran. From China's standpoint, the US is a crucial provider of just 22 products, mainly in the agri-food industry, accounting for 0.2% of China's total imports, according to the research. Since the EU is a significant supplier of 188 different products to China, especially in the agri-food, textile, and machinery and equipment industries, its position is more substantial. These industries make up only 2% of China's total imports but roughly 20% of its imports from the EU. When there is such a significant supply dependence, Subran remarked, we can't de-globalize China. He described the situation as systemic and difficult. It's a lose-lose situation. It will take 2 to 3 years for China's dependence on the globe to decline.